Unfortunately, you guys, I am still a little under the weather, so I apologize for my voice in advance. But we have seen an actual good confirmation from the SPY and the Qs today on the daily time frame, suggesting that this could be our so-called top. Now, there were some interesting things in these signals, so we need to go through them. We still have a chance for the bulls here, but we do not see any of the implication that they are going to step up at this moment. So the Bulls need to get their stuff in gear, or else the Bears will take full control, as they are almost taking full control right now. So let's just hop right into the SPY, because I want to get done with this because my voice really hurts at this point. So the daily time frame able to curl down. We are confirming, as of today, the full confirmation of these divergences. Now, when these things do confirm, you can say for the extended time frame, for the period of, say, the next, into maybe the end of the year, this signal as it sits right now is suggesting that at some point we are going to see a breakdown to potentially lower levels. That is what is being suggested here. That is being suggested with the weekly corrective move. And we have confirmations for that. That being said, a lot can happen in the shorter time frames, right? It doesn't have to be straight lines in all directions to head down. And at this point, the Bulls still have a very slim chance of a squeeze because of some news potentially coming out tomorrow. Tomorrow, on Friday, November 7th, we will get the Michigan consumer sentiment. We'll get some other data pieces as well. Some data today really shook us up, but we will be getting some interesting data potentially tomorrow as well. So we see that there is a huge amount of implied volatility. So this means if the bulls, and this is if you want the bulls to get back in gear, they are going to have to see a major squeeze here. We are going to have to see a complete breakthrough up to these type of levels towards 685, 686 to potentially take back that 5-day to have a chance to actually head higher. At this point, it would be much more likely for us to see further rollings, or the implication here from your positioning your MACD would say, okay, a lower high is still actually very likely. Even if we get a 2-hour move to the upside, it is likely to fail until we see it prove itself with the 30-minute chart. So the 30-minute chart here, let's give you guys some daily expected moves. As we are at the weekly expected move, what does this mean? This means that we have a high likelihood to bounce from these levels. We have some crazy things happening at this point, but this would say you have a 68% chance to close tomorrow inside that purple line. So just be aware of that. 678.20 to the upside, 662.42 to the downside. So we have a large amount of implied volatility. We will most likely see that come to fruition. But now we technically don't have to fully take out these levels. This would just be best case scenario for the type of squeeze that the bulls really need to see. You have to see a ballistic move here. So you're praying for some good data. You're praying for a big buyer to step in, because as of right now, the bears are fully in control here. Okay, with the bulls have an opportunity to take back control, but the bears are truly in control as of this move. We were looking for the potential divergence point. We did not really get that. I believe if you go to, say, futures, maybe the ES, and you look at it, you can see the divergence that we're talking about. You see how the bulls can have that taking back of control. So if you want to, you can pay attention to the SPX 500. You can pay attention to, I'm sure it's on the ES. Yeah, it's on the ES as well. You have 2-hour divergence here, suggesting what? Suggesting the 4-hour can go up, and you actually have a 4-hour divergence form there as well. So this wouldn't be, what the heck? That's not, that's not the right. Yeah, you have it here as well. So this would tell you that actually the ES is suggesting, oh, we can still just see another move higher. So I wanted to point that out to you guys as something to keep an eye on. It is a good liquidity area for a bunch of those buyers to come in. I mean, it's right in these gaps. It's right in the bulk of all this noise in here, which usually means a lot of people committed to things in this area. So what are we looking for in the 30-minute time frame? Well, tomorrow, what would be the most probable thing? We're going to have to remake some signals, right? If this is market's going to give us a hint, then we're going to be looking for the higher low, right, to go to the upside, or we are going to be looking for the divergence. But in this area, right, we got rid of these divergences. We're just looking at it on the future, saying, hey, it's there. We're acknowledging it's there. But at the same time, you still have a clear pathway that everything is heading down. We don't see any type of divergences, any type of higher lows from the 30-minute, which means that this daily expected move can get tagged, but look at the sellers in that area. So If the data tomorrow does not help out the market, you do not see a squeeze, then you could come into this daily expected move, completely roll that move to the downside. And then next week, this is where we'd want to pay attention to a divergence. But this would say that the next opportunity for downside would be the roll up towards the 5-day moving average, up towards a price of about 678, in my opinion. So that's what's going on with the SPY, right? It looks like the bears took too much control today, and the only thing left are those signals from the futures market. We'll go over to volatility in a moment. As we do this a little bit backwards, let's get you guys daily expected moves outside of the 68% zone. You are seeing a 32% moment as of right now. You have a 68% chance to bounce back in there, but you do have a lot of data apparently coming out tomorrow, at least the Michigan consumer sentiment. We do see 621.25 to the upside. We have 602.09 to the downside. Look at the positioning of the MACD. It crossed down near the center line, right? Which means what? Test the low, go make a new one. And this was a little bit rough in the morning. So we're seeing if we can get that counter move. If you can get that counter move, then it is still a very clear pathway down with these sellers that even if you did react to the upside, if you reject from somewhere like 621.25, that would be the next moment where you're going to see another roll, which means another dump, or it's going to set up a divergence point. But mainly with the Qs, you would just suggest, okay, if we see a roll towards that 5-day moving average, towards the daily expected move, then we would most likely see it test this low, go make a new one, and that's where we'll utilize the next day's daily expected move. As it stands, the bulls need to take back control. They need to see a new higher low. This is great to have a key level. This is a very, very obvious level right here of 627, I would say. And if you can squeeze past that level, well, then you're most likely going to start to use those things as support to potentially go higher. That does not mean that this cannot roll. This can easily be a lower high, as we were able to go negative enough to make that probable. But as of right now, we still would be close enough to that center line that if we curled up just for a couple bars, you're gonna be pretty well positive. So we'll be paying attention to this thoroughly. But it looks like if the bulls want a chance to save this before we go test, levels down in here, go test that monthly expected move, they are going to need some help from this data. They are going to need to see a squeeze going into Friday, and I would say actually into all of next week. So, all right, let's go over to volatility. Volatility, the signal to watch for here, one, this is not bearish for volatility. This is bullish for volatility, which might be a bearish thing for the market. We do see that the 2-hour was able to cross down, pull back to that center line. We mentioned that we did not technically make a lower low. You need to make that lower low. We want to see a breakthrough from this level to be convinced upside is there. We did not do that. We failed to do the 30-minute roll. We ended up coming up to these levels again. Now, the way to look at this is if the 2-hour is able to curl down here, then maybe the bulls are doing some work here. We can start to take out these lows. And we would see a period of time where volatility does subside for a week or two, maybe going into OpEx. But as it stands, this is a bullish sign for volatility, which is not a good sign for the markets. If the 2-hour wants to continue that upside, like it is pointing up right now, well, then there's no reaction necessary, and we should see higher volatility. We do not see any kind of real divergence here in the near price action. This says that, hey, even if we do see a bounce potentially tomorrow, remember that we could just be testing that 5-day, just like VIX is going to test this 5-day, and then we could see things pop off. And this is, I think, where it could get a little bit more dramatic. We could go down and break that monthly expected move. So that's what I'd be watching. As it stands for the daily time frame, you have seen a confirmation of the MACD. So this is going to be a huge deal. This says that a lot of the probabilities have now come together. And actually, the market did not do the most probable thing by giving us another wave to the upside on the 2-hour. This signal suggests that's not going to happen. We're actually just going to see this thing tumble. We are going to see major volatility come in as of right now. That is what this means. It means the momentum for volatility on the daily scale is now to the upside. Maybe we need to set some kind of trap on Friday, but that trap would most likely be if you don't see a squeeze from this 2-hour, you don't see us in the next 2 trading sessions be able to beat through this level of at least 680, 681. And then on Friday, you might just be coming up to this area and then rolling to the downside as we test those sellers. And guess what? Volatility is turned up on the daily time frame with that higher low, and the SPY is turned down on the daily time frame with the divergence. So you have to be very, very cautious with where this sits. But bulls, you need a squeeze, or else we look like we are going to head lower down towards that 660 level next. Thank you guys so much for watching this video. I really do appreciate it. I'm sorry that my voice has been kind of just a little messed up. Yesterday was a little messed up too. So thanks for bearing with me, guys. I'm trying to get through it just so I can keep looking at these markets and keep bringing you as helpful information as possible. All right. Get those daily expected moves up and make sure to trade like water. And other than that, peace out.